Company has reported a good set of Q3 earnings. We are now joined by Neeraj Kumar, the Group CEO of the company, to discuss the performance in greater detail. The stock, of course, was up nearly 10% in yesterday's trade. Good morning, Mr. Kumar, and thanks so much for joining in. First, your top-line growth looks quite good at 27%. Could you tell us what percentage of it came in on account of exports, what the export growth was, and what was the impact of demonetization on your domestic business?
Good morning to the viewers. The growth largely has been on account of improvement in the domestic market. The domestic market now, because of the government initiatives, especially in the water sector, the demand is picking up good. So export continues to remain sluggish by our standards, but domestic market is where we have seen largely the growth. The impact of demonetization, as you know, most of our products are industrial, so we did not have a major impact of demonetization on our sales. We did suffer something on the logistics parts because most of our products, they are transported by trucks. So to the extent that the truck business got impacted because of the cash crunch, we did have some impact on the delivery. But that was a very short term. Most of it has been made up now.
All right, Mr. Kumar, how much of your numbers come in from exports and how much of it is domestic? If you could give us that percentage breakup. Is it 50-50, 60-40?
At this point, no. Normally the trend is 60-40, but at present export constitute less than 35.
Less than 35%. All right, and your margins as well have come in at around 16.6%. I think steel would be a raw material, right, for you, and steel prices have been moving higher. Is it a pass-through to your customers? Can you hold on to these 16.6% margins that you have just delivered?
Yes, most of these steel prices are a pass-through, okay, and we expect our margins to be maintained or even improve.
Okay. You have indicated that your current order book is about $700 million. Sir, if you could tell us what the change has been, what's the increase in the order book, and what were the fresh orders that you saw in the prior quarter, and what's the pipeline looking on fresh order intake in the March quarter too?
Our order book has been around 700 million now for a few quarters. So basically, the inflow of orders and the project execution, they have been balancing out. And last quarters, a few significant win. One has been ONGC, where we got a large order for our seamless business. Also, we are expecting some very good orders from the US and the Canadian market. So going forward, the pipeline appears to be very healthy. In fact, at this point of time, as Jindal Saw, we see ourselves in a good position, in a sweet spot where good visibility on the order book, very healthy in terms of our order execution. So things are looking okay.
That's good, Mr. Kumar. You know that things are looking good. Obviously, the big problem really is the debt in your books. Your market capitalization is around 2,200 crores. The debt that you have, the total debt including working capital, is more than 4,500 crores approximately. How are you going to bring this debt down? Is your cash flow such that you can start paying off debt from internal accruals? What rate are you borrowing at? Do you expect that to fall as well? On a sequential basis, your finance cost has gone up by 15%, though on a year-on-year basis, it's down by 30%.
Yes, if you look at our debt, the debt on the standalone basis is about 4,000 crores. 2,000 crores is in terms of term loan, 2,000 crores in terms of working capital. So the working capital loan should be seen in the perspective of the order booking and the order execution. So the 2,000 crores of term debt which is there, okay, the effort has been to bring it down through internal accruals. More important, we are also working on adjusting the debt profile. The average debt maturity we are working towards, now it stands at more than 5 years.
All right.
Okay. So and how much will you look to bring it down to?
In the next 1 year, we expect at least a few hundred crores from the term debt to get repaid.
All right. Mr. Kumar, you know, you're looking to list one of these companies, GITF. That's what you've mentioned in your press release as well, GITF Infra Logistics on the BSE and NSE. all your viewers want to know what are the financials of this company. Are you going to be transferring some debt over there? Give us some details about that company. Then we can evaluate what kind of a listing price, etc. we can get on that company.
Yes, this is a significant development, and this is going to largely impact our market cap as well, because at this point of time, if you look at the market cap of the company, we believe that it is undervalued, because there were concerns about the debt, there were concerns about the subsidiaries. Now we have received the High Court order for a vertical demerger or a vertical split, where all the non-core businesses of JSaw, they would all be moving out. Along with this, the company would get listed, and it would have three businesses: the rail wagon manufacturing business, the EPC business, as well as the waste to energy business. So once they move out, and they would get listed now, in a few weeks' time, we should achieve the listing. Jindal Saw then would become largely a producing company, a production company, which would be focused on its core product, which is the pipes.
Mr. Kumar, pleasure having you here, and all the best for the coming quarters.